Nvidia shares just fractionally lower, for something that this heavily watched and this heavily traded. That's something. What does this result mean for AI demand overall, the broader ecosystem? Joining us now is Byron Deeter, partner at Bessemer Venture Partners. Byron, Nvidia had beats on the top and bottom. The guide was a beat. The margins, low 70s. I guess people can, have a bone to pick with that. But a big question is demand, and demand from the hyperscalers like Amazon. I asked Amazon CEO Andy Jassy about the demand for AI chips earlier today. Here's what he said.
We have a lot of demand for AI right now, and a lot of demand for our instances that have Trainium chips, have Nvidia chips, AMD chips. And I would tell you that at this stage, and it could change, but at this stage, if we had more capacity than we already have, and we have a lot, but if we had more capacity, we could monetize it.
For Nvidia, you're saying?
For everything.
For everything.
Yeah. I mean, I think, remember, there's really predominantly been one chip that people have used the first couple years of this revolution around generative AI. I think over time, people are going to use lots of different chips, and how that mix changes, we'll have to see. But I have high confidence that Trainium will be a chip that a lot of people use on top of our platform, in addition to Nvidia.
So, Byron, is this about the competition between Nvidia enhancing performance at one end and the hyperscalers trying to enhance the price performance at the other, and that determines where a stock like Nvidia goes from here, you think?
Great to be back with you, John. Thanks for having me on. And yes, I would break demand into two segments. The first is customer demand at the end pull-through. That's insatiable. And what these results show is that the large model providers, the application providers, can't get enough of AI-capable chips, and they're still being rate limited, which is almost inconceivable, several quarters into this AI revolution. But the next level is the demand by the hyperscalers of what chips they're providing. So you can think of it as the supply side of the equation for the end customers as well. And that's going to be diversified here in the coming quarters. This 85% market share that NVIDIA's enjoyed is going to come down. And so the question is, does the market growth offset that so that everyone can grow and there'll be many, many winners? Or does this start to erode NVIDIA's market position in the medium and long term? I think Andy and Amazon have played this beautifully. The Trainium chips are getting rave reviews early on, and there's going to be many providers, add in Google and AMD and many pure plays in this mix as well. And this landscape is going to get much more competitive by the back half of this year and into early next year. That will provide a lot more supply capabilities for these hyperscalers and for the end consumers.
So, Byron, what's the takeaway for so many other companies in the ecosystem, including software stocks? It seems to me Andy Jassy saying that demand is pretty strong. These numbers from Nvidia seem to indicate that right now the demand is pretty strong. That ought to bode well for some companies, no?
I think on many levels, Nvidia in the short to medium term continues to deliver near perfection. It's an exceptional company, and they've got a backlog of demand that they're still racing to fulfill. It also shows that a number of these companies on the application layer are starting to get real monetization, and they're reaccelerating growth. And there's going to be some tradable opportunities there as they inject AI into their applications. End user benefits start to take hold, and they're going to start to monetize. And so I think we're going to start to see some separation of the application leaders. And then I think we're going to start to see some more beneficiaries in the chip market in what's been a borderline monopoly market for the last many quarters, and that will start to have more beneficiaries and some more tradable signals there as well.
So, when I hear you talk about that in the public markets for the better part of 2 years, I would argue there's been some exuberance around the AI trade, particularly the so-called picks and shovels, Nvidia kind of being the poster child, but even some of the AI infrastructure names. Those have been coming off in recent days and recent weeks in public markets. You've seen some pretty big moves to the downside. If you're investing right now to see greater returns in the future, do you invest in the application layer? What's the next piece of this where you could see those winners and losers emerge more meaningfully?
Well, the biggest pure plays in AI are still in the private markets. That's the OpenAIs, the Anthropics, even the Databricks of the world, who are huge beneficiaries here. That's the next wave that people are waiting to go public. And those are still several quarters out. And so what people are trying to do is get pieces of the AI trade and get a little AI pixie dust on stocks. And you'll start to see some of the beneficiaries there. Obviously, Snowflake has moved a lot around it. Salesforce is racing to make Agentforce, part of their offering, and has some real, possible tailwinds if they can cannibalize their own core markets with these disruptive tech. But what we're looking for on the private markets is these pure plays that are going to be the disruptors. And I think that's what public market investors are most excited for, is the second half of this year and going into early next year, as some of these companies start to cross over and can really be disruptive for the legacy providers of software.